In his book Imperialism, Lenin remarked, "The concentration of production, the monopolies arising therefrom, the merging or the coalescence of the banks with industry, such is the history of the rise of finance capital, and such is the content of that concept." This quote encapsulates the dynamic of capitalism in the past century and is vindicated by modern research. Three systems theorists at the Swiss Federal Institute of Technology in Zurich have taken a database listing of 37 million companies and investors worldwide, pulled out all the 43,060 multinational corporations, and the share ownership linking them to construct a model of which companies control the others through shareholding networks, coupled with each company's operating revenues to map the structure of economic power. The model revealed a core of 1,318 companies with interlocking ownership. Each of the 1,318 had ties to two or more other companies. On average, they were connected to 20. What's more, although they represented 20% of the global operating revenues, the 1,318 appeared to collectively own through their shares the majority of the world's large blue chip and manufacturing firms, the real economy representing a further 60% of global revenues. When the team further untangled the web of ownership, it found that much of it tracked back to the super entity of 147 even more tightly knit companies. All their ownership was held by other members of the super entity that controlled 40% of the total wealth in the network. In effect, less than 1% of the companies were able to control 40% of the entire network, says Glatfelder. Most were the financial institutions. The top 20 included Barclays Bank, JP Morgan Chase and Company, and Goldman Sachs Group. To that will be linked in the description. The other 20 multinational corporations are Barclays PLC, Capital Group Companies Incorporated, FMR Corporation, AXA, State Street Corporation, JP Morgan Chase & Co., Legal and General Group PLC, Vanguard Group Incorporated, UBS AG, Merrill Lynch & Co. Incorporated, Wellington Management Co. LLP, Deutsche Bank AG, Franklin Resources Incorporated, Credit Suisse Group, Walton Enterprises LLC, the holding company for Walmart, Bank of New York Mellon Corp., Natixis, Goldman Sachs, and T. Rowe Price Incorporated, and Leggs Mason. The romantic idea of self-made, hardworking industrial capitalists is thus shattered by the hammer of reality. This heroic figure is exposed as no more than a shareholder in gargantuan corporations, the motor force of the capitalist imperialism. The profits of large-scale production and international exploitation of the resources of the oppressed nations guarantee that capital breaks out from the shell of individual property. The investments required by large, and especially multinational companies, go beyond the accumulated capital of any single individual, and banks become necessary to mobilize the capital needed to productive enterprise. Capitalism is hence provided with a mobilization of credit which keeps the quantity of idle money to a minimum and mobilize the largest amounts for productive purposes. The increasing mass of credit leading to a change in its very nature, which goes from the provisions of short-term finance or circulating credit to long-term investment projects or investment credit, which provides banks with higher interest in enterprises' long-term prospects. This, of course, ends up cutting into the entrepreneurial profits and increases finance capital share in the economy, as can be seen in this graph. On top of this, banks and their role as capital mobilizers reinforce the tendency towards growing concentration and the centralization of capital. Banks come to dominate companies, increasing their stake in productive enterprise through the acquisition of share capital. It is no coincidence that the top companies in the global network of capital are banks or financial institution services corporations, like Barclays, Capital Group Companies, and FMR corporations. As capital centralizes and banks push up the profit rate on their investments by sponsoring larger and monopolistic companies, free competition is thwarted. Not real capitalism is indeed the purest expression of the laws of motion of capitalist society and the product of the logic of this mode of production. As financial capital is transferred from competitive enterprise to multinational oligopolies, the rate of profit is systematically pushed up for big businesses, and the three primary contradictions of global imperialism outlined by Joseph Stalin are brought to their highest point under the existing conditions of social polarization, where capital, concentrated in the hands of a few giant capitalist associations, manifests itself in direct opposition to the world proletariat. Imperialism is then nothing else than the highest stage of capitalist development, where gargantuan concentrations of capital compete for dominance over the world, and especially over the oppressed people. It is a capitalism that is forced to admit its own contradictions and its own desperation as sweat stained profits become blood stained profits.